Hi and welcome to my channel. My name's Créde. I'm a high performance and trading psychology coach. And it's my mission to help you master your mindset, manifest your goals, and lead the rich, abundant life that I believe is everybody's divine birthright. This video today is specifically for traders. And I want to address a challenge that I've seen come up again and again in one-to-one coaching and in my online programs. And that is, how do people know when and by how much to scale up in their trading? So when is the right time to kick things up a notch and risk more in the market in order to gain more of a reward? Before we jump in, I'm going to give two caveats. The first one is that what I'm going to speak about, so this framework that I'm going to give you in this video today, only applies if you currently have an effective trading plan. So that is, if you know exactly what you should be doing in the market in order to be profitable. You have rules, you have a strategic approach to trading that has been proven, back-tested, and you're absolutely sure that if you executed your trading plan to a T, like a robot, you would be profitable over time. So if that isn't you, if that's not currently in place for you, then I would really recommend that you sort that piece first. So focus on the technical part first, to the point where you have very clear rules and you know what you should be doing. And once that's complete, then it's more appropriate to address the psychology side of things at that point. So that's a helpful way to approach it. So assuming that you do have a solid technical plan in place, I'll just give the other caveat that I am not in this video making any recommendations as to the numbers involved. So I'm not suggesting what risk reward ratio you should be trading with, how many contracts you should be trading with. I'm not giving you that advice. What I want to offer you is a way of thinking about this topic in your mind and a way of concretely and practically figuring out a plan for yourself so that you can take all of the emotion out of scaling up in your trading, and so that you can create a plan that is perfectly tailored to you, to where you're currently at in your trading and to your long-term trading goals. So that's my intention today. So we're talking about scaling up in trading from the psychology perspective. If you do find this video useful today, I would really appreciate if you could give it a like, share it, hit that notification bell if you're subscribed to my channel, and if you're not, please do subscribe so that you don't miss out on any new videos or updates. Let's talk about the problem of why it can be so challenging to know exactly when, like at what point in time, and by how much to scale up in trading. If we think of trading as a set of stairs, so at every point where there's a step, we're making an incremental leap in terms of what we're risking in order to gain a greater reward from the market. So the first step could be thought of as trading on sim, when you're getting all of the technical pieces in place and you're getting really comfortable with your strategy, and then you decide to go live and you take a step up. So it's a leveling up of what you're risking in order to gain a reward from the market. And then ever after in your trading career, you're going to be making those incremental steps up as you want to push on, as your trading account grows, maybe as you want to get a greater return. So you're willing to trade with more contracts because you're very confident in your ability to execute your plan and you want to make more money from trading, which is fair enough. The thing to keep in mind and to be very conscious of from a psychology perspective is that at every single point in time where you're taking a step up, so at every critical juncture where you're increasing risk in order to gain more from the market, your psychology is vulnerable. And what I mean by that is that the psychology or the psychological makeup, the mental edge that allows you to be effective at phase one or step one, trading on sim, is not going to be robust enough to allow you to be effective at phase two or step two. And it's not to say that your mental edge needs some massive overhaul every time you try and increase your performance in the market or increase what you're gaining from the market. But it does mean that you have to be aware that if there's any sort of fault line, anything weak or challenging in your psychology when you're on one step and you decide to move to the next step, you are automatically going to magnify the impact of those shaky psychological foundations. So to make that more concrete, if you're trading on sim, we'll keep it simple. We'll start on the first step. If you're trading on sim and you're finding that you're over trading, you're revenge trading, you're often ignoring your stops and loss limits, you can't expect that to get any better when you move to step two. So let's say you're impatient to start trading live. but you still got these psychological challenges going on, and you decide that it doesn't matter, it's something you'll work out along the way. What you're doing when you take a step up to step 2, trading live, is you're increasing the pressure that you're putting yourself under, because you're suddenly risking your own money in the market. So naturally, that's an increase in pressure. And that means that you need to be able to have even better psychology, and even stronger mental edge to maintain the same level of performance at that next step up. So if you're already experiencing challenges in your psychology, and then you increase the pressure, you increase what you're risking, you're going to magnify the losses that you're experiencing. And that's an absolute, almost certainty. So what I'm suggesting is that you use a framework in order to first shore up your psychology, so that you're eradicating indiscipline and inconsistency before you ever scale up in your trading. And that's a slightly different, whole more complex topic. So I'm going to speak about at the end, where you can find some information on just generally making your psychology solid. What I want to give you in this video today is a framework for once your psychology is solid, and once you have the tools to work on your mental edge, to knowing when and by how much to scale up. So let's say that when you scale up, if you're already experiencing overtrading and indiscipline like that, you're going to experience that to an even greater level. So in the perfect scenario, what we would have is, when you're on step 1, you shore up your psychology so that you can objectively see very strong discipline and consistency, so that you create performance metrics that you can actually tick off every day, and you can see your progress, and you can tell yourself, yes, by objective factors here, by objective measurement criteria, my psychology is solid, and therefore I'm ready, I've got the green light to move to phase 2, so to step 2. So I'm going to explain how to do this in detail in a few minutes, but I just want to spend a couple of minutes here bringing this into an analogy to make it make more sense. So if you imagine that you want to build a mansion, and you have to pour the foundations first, of course. If you rush pouring the foundations, if you pour half the foundations, and you decide that actually the mansion, your next door neighbor's mansion, is going up quicker than yours, and really you should be further ahead with your schedule, so you kind of skim through the foundation setting and you try and jump straight to building phase 3 of the mansion, so you're trying to build the 3rd floor of the mansion, then obviously you're going to build something that's going to crumble down around you. So it's the same with trading. If you get influenced by emotional factors, things like FOMO, greed, impatience, comparison with others, it can cause you to rush through this process and to try and take a step up before you're psychologically ready. And that can have catastrophic consequences for your trading. So what I want to give you is an objective way of bypassing all that emotion, completely unplugging from any decision making that could be based on emotion, and taking a 100% rational, logical approach to this process of how and by how, when and by how much do I scale up. So just like a tryout, if you were doing a tryout for a funded account, you would have very clear criteria of what you're allowed to trade with, the time frame in which you have to complete the tryout, and the success criteria, which will tell you that you've been successful or not. It's clear cut, there's no ambiguity. We want to take those principles and plug them into a phased approach to scaling up in your trading. So for the purposes of this example, I'm going to imagine a trader who's trading futures on NASDAQ. And obviously this will apply if you're trading oil, any other instruments, Forex. You just have to be creative about, taking this abstract framework and applying it to your specific context. For this example, we're also going to talk about 4 phases. But of course, if you wanted to plan out, for the next year ahead, maybe that would look like 6 phases. So these are things that can change depending on what suits you and your unique situation. For this example, we're going to take 4 phases. Phase 1 is the trader trading on SIM. The first phase for building out this framework is to identify exactly how you're trading currently. So what is your risk reward ratio? How many contracts are you trading with? And there may be other details to consider depending on how and what you're trading. But let's keep it really simple, and we'll just talk about risk reward and contracts. So you identify phase 1 is, I'm just going to keep doing what I'm doing. Great. Then you want to identify what it looks like in phase 2, phase 3, and phase 4. And I'm purposely moving my hands up like this because we're moving up the steps in each of those phases. So you only want to make an incremental increase in pressure as you take a step up. So yes, you want to risk a little bit more in order to get a greater return from the market. And this is assuming that this is somebody who wants to approach it like that. If you're somebody who just wants to keep at the same level and keep making the same amount of money from trading for years, that's totally fine. What I'm talking about is somebody who has a long-term plan of, say, making a full salary from trading, and as their account grows, they want to be able to trade more contracts to get more from the market. So that's the type of trader I'm talking to. So at each of these steps up, you just want to make a little incremental increase in pressure and incremental increase in risk. So I'm not advising that you change your risk reward ratio at each of these junctures. Let's talk about it more in terms of increasing the amount of contracts that you're trading with. So in phase one, you're trading on sim, and let's say you're trading 20 micro contracts on NASDAQ. And then you decide that phase two looks like just going live. So you're going to trade 20 micro contracts on NASDAQ, but you're going to do it live instead of doing it on sim. And this may or may not be realistic, so just bear with me as I use these examples. Then in phase three, it might look like, okay, you've been trading micros, you want to actually start trading minis, but you're going to trade 4 mini contracts. And then in phase four, maybe you decide to push that up to 5 mini contracts. So again, those specific numbers are going to be up to you to decide what's relevant to you, but this is just to give you the framework. So once you've decided what each phase entails, what does it look like? What are you trading with in each of these phases? And there's a clear progression to the amount that you're risking in the market in order to see a greater return. Then you decide what each of the phases, what the milestone is for passing each of the phases. So we're going to think of this like a test. And if you pass the criteria for phase one, then you get to move to phase two. So it's not necessarily time-based, although we do put a time frame around it. I'll explain what that means. So let's say you're in phase one, you're trading on sim, and I think we said we were trading with 20 micro contracts. So your success criteria could be something like, I have to achieve 4 green process and green P&L weeks in a row before I start trading live. So that doesn't tell you whether it's going to take you 6 months to do that or whether it's just going to take you the next 4 weeks. Either is possible, but it does give you a concrete criteria that allows you to objectively decide, yes, I've passed this, or no, I haven't. And there's no emotion involved. No emotion can sway you and say, oh, I should be progressing quicker, because you've either passed the phase or you haven't. So you're going to define your success criteria for each of the phases. And just to give you an example of how that might progress, because it's going to be harder at each phase to progress to the next one. You want to actually engineer it that way to make sure that your psychology is as robust as possible before you start risking more and more in the market. So for example, phase one, we go with the 4 weeks of green process and P&L weeks. In case anyone's confused as to what I mean when I'm saying a green process week, that would be where you actually define measurement metrics or success metrics that are more based on the execution of your trading plan. Going to keep this simple. Imagine that one of your performance metrics is 90% or higher of all trades taken met my A+ setup criteria. So if you're someone that's struggling from over trading, then this would be a good performance metric to have. And if you achieve that stat in the day, so that you're only taking your A+ setups at least 90% of the time, then that's like a green process day. Tick, I followed my plan. And obviously a green P&L day is one where you're profitable. So maybe you decide that in phase one, 4 weeks in a row of green process and green P&L is your criteria for passing phase one. And then once you've done that, so you're doing that on sim, then you move into phase two, which is trading live. And we understand that by doing that, by moving to phase two, you're increasing the psychological pressure. But you can be confident that your mental edge is strong and ready to move to the next level because you've passed this criteria that you've set yourself. So you move into phase two, and it's going to be a little bit harder to pass phase two, and you definitely want to engineer it this way. So maybe in phase two, you've moved up to trading, we haven't changed the amount of contracts because you've just increased the pressure by trading live. but you might decide that actually you need to give yourself longer in order to prove that you're mastering phase 2. So you decide that in phase 2, I need to make, let's say 9 out of 12 weeks green, process and P&L. So it does give you some wiggle room for bad weeks, the market changes, you have a couple of mistakes, whatever, that's important. But you decide that you would be satisfied to move to phase 3 if you had hit 9 weeks out of a 12-week period where your discipline and consistency was excellent and where your discipline and consistency was leading to actually profiting in the market. So then that would be the criteria for phase 2. And again, just note, this isn't time bound. You're not saying I have 6 months to pass phase 2. You're just saying as long as it takes me to hit this goal. And then you do the same for phase 3 and the same for phase 4, each one being incrementally harder. So giving yourself, more weeks that you have to be hitting your goals in order to pass to the next phase. So hopefully that makes sense. So just recapping that, you're going to identify what you're trading now, what it would look like to increase risk, what you're risking in the market a little bit in order to get more returns. And then you're going to set success criteria, which will determine that you are allowed to move to the next phase. So all the while, if you're hitting these success criteria, it's showing you with objective metrics that your discipline and consistency is good. And this is letting you know that your mental edge is solid, that your ability to withstand pressure is excellent, and it's not affecting the actions that you're taking in your trading. And I just want to give you also 3 key factors to keep in mind to make this approach work for you. And the first one is that you need to make sure that your psychology is robust before you transition to the next step. So even if you don't implement this framework, just keep this in mind, that when you try and increase your, when you try and scale up in the market, you're going to increase pressure. And therefore you have to be confident in your psychology. So if you're still seeing indiscipline, challenges like revenge trading, hesitating to take a trade, jumping out of a winning trade too soon, it's really better from a strategic perspective to address that and overcome it before you move to a higher level of performance in your trading. Because if you don't, and if you assume that it's just naturally a part of trading and you have to put up with it, you're going to lose more money at each step, at each juncture where you level up. So make sure your psychology is robust before you transition. Number 2, don't make too big a jump at any one time. The key to long-term success is just incrementally increasing the amount of pressure that you're putting yourself under. So again, if we go back to the idea of lifting weights, you don't jump from lifting 10 kilo weights to lifting 100 kilo weights in a week. You would build your way up to that by strengthening your muscles. So you might go from 10 kilos to 15 kilos to 20 kilos to 25 over a structured period of time. And you will get to the goal of lifting 100. Again, I'm not sure how realistic this is, but the principle is right. You would get to that goal eventually following that process. It's the same with trading. You just want small incremental tests of ourselves. And if we approach it in that way, we are much more likely to succeed because we're not exposing ourselves to massive vulnerability in our psychology or emotion-based trading at each of these critical junctures. And then lastly, last piece of advice, and this is really important, be prepared to take a step back if you find that your performance is becoming shaky. So let's say that you've gone through this process, you've created this wonderful framework, you're really happy with it, it makes sense, and you move to from phase 2 to phase 3. And for whatever reason, that suddenly has a massive impact on your psychology and you see your discipline and consistency plummet. Where it was excellent at phase 2, you increase the pressure to phase 3 and you see it, decrease in your performance. Then you can always move back through the steps. So it might be that you need to extend the phase 2 success criteria. Maybe you need more time trading in phase 2 to get your psychology really solid before you move to phase 3. So don't think of this as a fully linear process, even though we'll set it up like that. The reality of moving through this could mean that you're taking a step back, so you're sliding down a phase at any point in time. This could also happen if the market conditions changed and you needed to address something on the technical side. So you're not going to increase risk while you're also addressing some change in the market and some technical change in your plan. That would be creating too much instability and it would be too hard to deal with. So let's say market conditions change, you quickly realize it, you send yourself back to phase 2, and you then go through the success criteria for phase 2 with the new conditions in the market. Or something happens in your personal life that requires a lot of your emotional energy, your focus, and it's making it harder to trade. Then you can just slide back a phase and take the pressure off yourself. So think of this not as punishing yourself for non-performance, but actually giving yourself a way to increase and decrease pressure as necessary. And in that way, you're actually taking control of the entire psychological aspect of your trading. So it's actually empowering to be able to know exactly what to do to move down and to preempt any trouble or psychological challenges happening before they actually hit your P&L. So be prepared to take a step back if your performance becomes shaky. And that's not to say that, you just do that for a few weeks and then you have to hold yourself there in phase 2 purgatory till it's time to move to phase 3. You can assess when the conditions change again if you're ready to move to phase 3, and your criteria will tell you that. So following this approach means that you take all of the emotion out of the decision as to when am I ready to scale up and how much should I scale up by. So it's not going to become an impulsive decision that's driven by greed, fear, or FOMO. It's something that your rational, logical self has planned out away from the market, away from the heat of the trade. It's not going to be influenced by your P&L, by whether your trading account has recently taken a hit or whether you feel that you need to catch up with the other traders in your Discord who seem to be doing better than you. This is going to be a plan that is created by you, full of logic, based on rationale, and is perfectly tailored to your goals and how you're trading. So I really hope that makes sense. If you have questions on this, feel free to drop them in the comments below. And the one big piece that is left out of this video, because it's just a massive topic to try and shove in with this video as well, is how to actually use mental training tools to cultivate an unbreakable mental edge. If that's something that you're interested in learning, that is my wheelhouse. That's what I do. So you can check out my free masterclass, which will talk you through the system that you can use to achieve pro level consistency and 100% discipline in your trading in as little as 8 weeks. So there's lots of good insights and practical tips in that. That's a free masterclass that's available pretty much on demand. So that's in the link below or in the description below. And also I do have a program, which is an online program that people can enroll in, and it's really comprehensive, and that's Go Deep to Level Up Your Trading. So if you're interested in learning more about that program, which is a paid program, I'll also leave the link in the description box below. And they both go into much more depth in terms of how to practically work on your mindset in order to be able to withstand pressure and fulfill your true trading potential. So again, if you've liked this video, please do hit the like button, share it with other traders, and subscribe to the channel. And I look forward to seeing you very soon.